Thanks so much for joining us. I'm Marlon Bowling with you and watching closely what's going on in the markets. And I want to welcome aboard Todd Bubba Horwitz of BubbaTrading.com. And he joins us right now. Todd, I can't wait to get your thoughts on what we're witnessing here in these outside markets, like the financial markets and also, the crude oil market today. What do you see behind all this, and how much impact do you think this is having on the ag trade overall?
Markets are getting hammered because, it hit a little rally yesterday, but the banks are in trouble, Marlon. This is a repeat. And if you think that only Credit Suisse and Signature Bank, not Signature, but Silicon Valley Bank are the ones in trouble, you should really think about that again. Those are just the first two. And now that we're getting the notices from all the banks that, we're strong, we're in good shape. Well, this ties into what I've said all along, is that the banks are over leveraged and they don't have an accurate stress test. I think what it means overall is that money, once this settles in and we realize that these markets are going a lot lower, I think the money will then flow into the grain markets. I mean, basically, when you look at corn, wheat, and beans, beans are down 12 cents, but they're still stuck in a range in an upward trend. Corn and wheat are a little bit weaker, but they're higher today. And I think that money's going to flow in that direction that is coming out of these other markets, because it's got to go somewhere, and I believe it's going into the commodities, especially the grains to start with.
Well, let's walk through these prices here provided by a bar chart. The corn had been higher earlier this morning. And again, I'll remind everybody that we had an overnight export sale announced by USDA. It was 667,000 tons, and it was corn sold to China, and it was for the old crop marketing year again. So this is back-to-back days of similar amounts. And yet, now here we are with the May corn, only a penny higher at 621 3/4, and that's 7 cents off of our overnight high. We have the December contract actually 3 3/4 lower at 555 1/2. That's only one tick from our low of the day. Now in soybeans, this is what's going on now. Now we have triple-digit losses across the board. The May contract down 12 3/4. We're at 1481. Just a penny from our low of the day, 19 cents off our overnight high. And November soybeans down 13 3/4 now at 1324 3/4. So all kinds of pressure in soybeans today. On the wheat, well, it's hanging on to some very small gains in Chicago. May up just a half cent. You have July up a penny at 707 3/4. Now in Kansas City wheat, you have May down a half cent, but July is up a penny and a quarter at 806 3/4 right now. In the spring wheat market in Minneapolis, you have May down 2 1/4, and you have July down a half at 846 3/4. Don't want to leave out cotton. Cotton can make some big moves, and well, today it's to the downside. You have July cotton down 201 points at 79.92, and December down 156 at 81.10. Todd, sooner or later, I would imagine that the planting intentions and the upcoming growing season weather for planting here in the U.S. is going to have to overshadow everything, isn't it?
Yeah, it will. But again, remember, the bottom line is, Ron, everything always comes back down to money. Okay? That's really what we're looking at. And the money is going to look for a home. And I think that home is going to be, starting in the grain markets. Again, this has been my contention. This is the kind of action I've been looking for quite a while. And I don't think that's going to change. I think we're going to continue to see this kind of stuff, and I think you'll start to eventually see this money flow into the grain markets, and we'll see how it plays out. But I think that's what it looks like to me.
All right. Well, thanks for sharing your insight today, Todd. Always good to hear from you, Todd Bubba Horwitz of BubbaTrading.com. Now we'll take a break here, and then I'll take a look at livestock next.